Why is Tesla stock soaring even when its sales are plunging? What on earth do investors see that the numbers don't show? Today, we're diving deep into one of the most puzzling weeks in Tesla's recent history and what it really means for the company's future. Hey everyone, welcome back to the channel. I'm Ken, and if you're new here, we break down everything happening around Tesla, from stock market moves to groundbreaking tech, so you can stay ahead of the curve as an investor, owner, or fan. Now, let's jump right in. The most contradictory week for Tesla. Yet if I had to describe last week for Tesla in one sentence, it would be this: the numbers and the reality went in completely opposite directions. On one hand, Tesla's sales in Europe plunged, losing market share even as the overall EV market kept growing. On the other hand, Tesla's stock price skyrocketed and analysts raced to raise their price targets. This raises two big questions. Why is the stock going up if the cars aren't selling? And what exactly are investors betting on? The answer lies beneath the short-term numbers, in Tesla's deeper value and the foundation it's laying for the future. Sales are falling. Here's what's happening. Let's start with the hard numbers. In August 2025, Tesla delivered 14,831 vehicles in Europe, a 22% drop year over year. And since the start of the year, deliveries are down more than 30%, even though the EV market as a whole grew by about 30%. So it's not that EV demand is fading, it's that Tesla specifically is losing share. There are a few reasons for this. Competition is heating up fast. European automakers are launching a flood of new EV models, and price wars are getting intense. Tesla is no longer always the cheapest option. Plus, changes to government subsidies in some countries have raised the cost barrier for buyers. But this isn't the full picture. In some regions, Tesla is rebounding dramatically. For example, in Sweden, Model Y registrations in September surged 492% month over month. New design updates and better supply coordination are clearly paying off. So, this isn't a story of Tesla is no longer popular. It's a story of regional differences and timing. And that's why it's far too early to conclude that Tesla is finished based on short-term data. Investors are looking beyond the numbers. Now, let's talk about the part that really matters. Why the stock is going up even while sales are down. It's because investors are not valuing Tesla as a car company anymore. They're valuing it as a platform company, one that's expanding into AI, robotics, autonomous driving, and energy. Wedbush analyst Dan Ives recently raised his Tesla price target from $500 to $600, arguing that Tesla's 5 to 10 year potential isn't fully priced in yet. And when you look at the company's future growth drivers, it's easy to see why. 1. Robotaxi revolution. Tesla has started testing its Robotaxi service in cities like Austin, Texas. As full self-driving FSD improves, this could become a massive subscription revenue source far beyond car sales. 2. Optimus, the humanoid robot. Tesla's humanoid robot Optimus could enter commercial production as early as 2026. It's designed to tackle labor shortages and factory automation, problems worth trillions of dollars globally. 3. AI as a core business. With its own AI chips and evolving neural networks, Tesla is transforming into an AI software company, and AI software tends to scale much more profitably than cars. Put simply, the stock price is being driven by future cash flows, not current delivery numbers. Investors are betting on Tesla's evolution from a car maker to a multi-industry tech platform, and there's another powerful signal. Elon Musk himself bought about $1 billion worth of Tesla stock recently. When the CEO puts that much of his own money in, it's the strongest possible vote of confidence that the stock is still undervalued. The tech that's building Tesla's future. So, what exactly is Tesla doing today to build that future? Let's break it down. FSD version 14, a giant leap forward. The next version of full self-driving, version 14, starts rolling out next week. Elon Musk says the car will feel like it has a mind of its own. Major improvements are expected in intersection handling, pedestrian recognition, and driving human likeness. Once FSD reaches that level, adoption rates, subscription retention, and eventually Robotaxi deployment could accelerate dramatically. The unboxed manufacturing revolution Tesla also secured a patent for a new unboxed process, a radical manufacturing method where cars are built in separate modules and assembled at the end. This means faster production, lower costs, and higher factory efficiency, key elements for scaling robotaxi fleets profitably. It's more than just a new production technique. It's a new industrial model. Superchargers become part of the infrastructure. For the first time, US highways now feature official road signs pointing to Tesla superchargers. This marks Tesla's charging network as part of public infrastructure, not just a company asset. Meanwhile, Tesla is building 500 kilowatt plus superchargers, more than twice as powerful as the current generation. That means ultra-fast charging in just minutes, and future EVs will likely be built with this standard in mind. Every one of these moves in autonomy, manufacturing, and infrastructure is part of a bigger strategy, laying the groundwork for Tesla's next chapter. What it all means for the next 10 years. So, what does all this add up to? From an investor's perspective, Tesla isn't just selling cars anymore. It's becoming a mobility, AI, energy, and robotics platform. When robotaxis launch, revenue will come from subscriptions, not sales. When Optimus rolls out, it could unlock entirely new markets. And when AI becomes Tesla's core, the company's valuation could look more like a software giant than an automaker. For owners, this transformation is just as significant. With advanced FSD, your Tesla could earn money for you as a robotaxi, turning a depreciating asset into a cash-generating one. Supercharger expansion and infrastructure integration will make ownership easier and more valuable than ever. The key is not to get distracted by short-term delivery data. Each piece of news, each product update, is a puzzle piece in a much larger vision. Conclusion: the future is the real story. This week might look confusing on the surface, falling sales, rising stock, but zoom out and the picture becomes clear. Tesla isn't being valued for what it is today. It's being valued for what it's becoming. A company that unites AI, robotics, mobility, and energy into one powerful ecosystem. So, what do you think after this week's developments? Are you worried about short-term sales declines, or are you excited about Tesla's long-term future? Share your thoughts in the comments. I read every one of them. And that's it for today's video. If you found this breakdown helpful, hit that like button. It really helps the channel grow. And if you want to stay fully up to date on everything Tesla, from the latest features to the biggest stock catalysts, make sure you're subscribed. Thanks so much for watching, and I'll see you in the next one. Until then, enjoy life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.